Let's focus on PTC Industries. The company recently announced the commissioning of a 1,500 ton per annum VAR furnace for producing high-quality titanium alloy parts. We have with us Mr. Sachin Agarwal, who is the chairman and the managing director of the company. Hi, Mr. Agarwal. Good morning. Thanks a lot for joining in. Wishing you and your team a very, very happy new year for the remainder of this year. Well, you've given good news on the first day itself. The commissioning of this particular furnace is something that the market was waiting for. It's a 1,500 ton per annum capacity. Could you help us out with a few numbers? I understand that normally ingots come for roughly around 40,000 rupees odd. You will be selling it, I think, could be selling it in the cast form, so it could be around 50,000 rupees per kg. If that calculation is correct, what is the total revenue that you can generate from this 1,500 ton facility? Please go ahead, sir.
Thank you very much. Happy New Year to you and Happy New Year to all your audience. So I think this is first of all, it's a major achievement in the sense that this is the first time titanium ingot manufacturing or titanium alloy manufacturing is starting within the country. This is part of our strategy to achieve parity in terms of all metal-related aspects in the country and put the country at par and make it fully self-reliant in the entire supply chain related to defense and aerospace. Specifically related to the numbers, the titanium ingots in the form of billets and other materials sell at a varied rate. We are not just going to make ingots. This will be a very interesting year for us because this is part of our strategic material technology complex in Lucknow, which is being built on a 50-acre campus in the Lucknow Defense Corridor. And there we are. This is the first equipment that has gotten commissioned. There are many more equipment to be commissioned. This is part of our melt capacity or melt facility. Besides, there's a whole new casting facility coming and a whole new open die forging and rolling mill facility coming, which will convert these into billets and rounds, bars, sheets, plates, and every type of wrought and mill product. The range of selling this material in titanium, it goes right from around 2,500 rupees per kg to almost 15 to 20,000 rupees per kg. So, and this is just 1,500 kg is first equipment. There's another EBCHR, which will also be commissioned during this year, later part of this year, which is a 5,000 ton capacity for titanium. So it's a huge capacity. It's a significant percentage of the world capacity.
Mr. Agarwal, we're trying to get a number. 1,500 tons per annum can generate how much of revenues? 400 crores, 500 crores, 300 crores. At optimal levels, what kind of revenue can it generate?
It's as I said, this is not a single facility. This is 1,500 tons is just one part of the process. There's a whole additional capacity coming. So we have to marry both of them together. If you look at the entire capacity of the plant towards the end of the year over the next year, then we're talking about a 6,000 to 6,500 ton capacity, which at full capacity could generate anywhere between 2,000 to 3,000 crores, up to even 4,000 crores, depending on how we convert or in which form do we sell these materials in.
Just to understand better, I believe that it goes up to this facility, this capacity of 6,000 tons plus once you commission the EBCHR and the PAM furnaces. By when does that happen? Which quarter of this year? And just to reiterate that number, at optimal levels, you can do anything in excess of 2,000 crores from this facility. Is that correct?
That's right, yeah. And then these other equipment will also get commissioned within this calendar year or the next financial year.
Mr. Agarwal, good morning. Thank you for joining in. Firstly, we wish you a very happy new year as well. Firstly, if I can get just this out of the way, that will this facility be earnings accretive from FY26? If I get that correctly, if you could clarify on that. And the second one being the fact that you also completed the acquisition of Track Precision Solutions last month after the approvals that you got from the UK regulator. What was the rationale behind that, and how does that add to your business synergies?
Yeah, so the rationale behind Track Precision is that, as I mentioned, our company is into manufacturing of in all areas which are strategic and critical in nature, and where technology has been a constraint for the country for many years. Right, for anything related to metals, so anything related to strategic and critical materials like titanium, superalloys, alloy manufacturing, mill products, wrought products, as well as castings and forging. One of the key technologies missing in the country, or the technology or know-how missing, was related to machining of casted airfoils. If your other audience would know, about a year back, we announced, or less than a year back, we announced complete technology development of single crystal castings within the country. Now we have acquired Track in the UK, which can machine and drill and make these ready to fit and coat ready to fit cast blades that go on aero engines as well as on industrial gas turbines, which is a very specific technology. Very few companies in the world has this capability. Even within India, people can machine blades and airfoils from solids and forgings, but not from castings. And that's a specific technology that we have acquired.
Mr. Agarwal, how does this acquisition and the new capacity you are adding add up to your margins? Your first half margins were around 26.5%. How does that add to your margins? How much more improvement do you see with these two steps that you have taken?
The margin development will keep on progressing over the next few years. We expect the margins to be somewhere in the region of around 30% going forward.
All right, very quickly, before we let you go, I'm looking at an ICICI Securities note who believes that this is a big positive for you, this commissioning of this facility. And they are talking about revenues of around 750 crores for FY26, which goes up to around 1700 crores in FY27. Would that be a broad aspiration?
Yes, I would say so. Yeah.
Okay. And this 30% margins, we should see it sometime in FY26 itself?
I would say years after that, maybe a year after that.
Just one quick point with regard to your working capital days. That's one of the risks that they have mentioned. High level of working capital is one of the potential risks. Could you tell us what it is currently, your working capital requirement, and what's the outlook on that front?
Working capital is in the region of around 100 days, 100 to 120 days. Currently, I don't, as you asked about the margin, if the margins are sitting at around 30%, the advantage with the mix of products that we have, right from castings to materials, is that the entire value chain of the right from material all the way to finished products is covered within the company. So the margin is getting built up on each process. So we are actually having 4 processes all within the company. So as we go forward, in comparison to the entire revenue or top line, the working capital requirement will actually start diminishing rather than increasing. Okay.
All right. Well, thanks a lot for joining in, Mr. Agarwal. You seem to be quite optimistic on prospects. The stock for the last 6 months hasn't done anything much. So it seems the street was waiting to hear something on this particular front. We'll track you to a couple of these numbers. Appreciate you joining in.